Hey folks, how we doing out there? Doc Severson with you here, Ready, Set, Trade. Doing a Ready, Set live session. We haven't done this now for, 2 or 3 months. And for those of you paying attention, you may notice a little bit of a different background in the back here. Moved to a different place, so new brick in the background. All right, how's everybody doing out there? Today is Wednesday, the 22nd of July. And we thought we'd do something a little bit different today. So let's get right into it. And we'll be in and out of here in maybe half an hour or so. So hello, everybody. Welcome to Ready, Set, Trade. This is our Ready, Set live session. So what I'm going to do is give you guys 5 points and then the trade of the day. Hey, Rajith, good to see you guys. Okay, so welcome to our live trade of the day session. We plan to do this on a weekly basis. So this is going to be a little bit different. For those of you that are wondering just where in the heck Mav is, he's in the chat room. So if you want to say hi, reach out to Mav, say hello, tell him you miss him. Okay. If you want to be notified on these things when we do them next week, make sure you hit the notify bell so that you are aware of things. All right, today's session, what are we going to do today? I've got a number of topics that I want to cover for you first before we get to the trade of the day. First of all, the market does not care about your logic. It does not. And then we're going to talk about the psychology of runaway markets, which we have. How the institutions are driving asset prices today. How the price is moving in today's market and how to capture this edge. What is the crypto market doing? And then we'll get to the trade of the day. Again, I'm going to move through this pretty quickly. If you guys have any questions, I will cover those at the end of today's session. So for those of you that want to split, you can take off or watch a replay later on. And by the way, for those of you watching this on a replay, hello. Want to pretend like you're here with me? Welcome aboard. All right. Number one, the market does not care about your logic. Doesn't care about you. Doesn't care what you think. Many traders come to the markets from a technical background. So for those of you out there that are coders or engineers or attorneys or some type of accountant, somewhere where you're using a heck of a lot of your left brain, go ahead and raise your hand and admit it. So many of us come from a technical background. I had an engineering background. And in these types of careers, you're going to be rewarded for your application of linear logic, your ability to put little things in the right, correct boxes and to make everything, create order out of chaos. 1 + 1 = 2, right? So technical analysis will come easily to you. Oh, this makes sense. It's nice patterns here, and you understand the difference between divergences and RSIs and moving averages and crossovers. And it's just like mastering a new gaming interface, right? It all comes very easily to you. Here's the problem, though. You're assuming that markets behave in the same linear manner. And you're shocked to find that markets don't behave rationally. So I just, here's a little Facebook exchange. Yeah, I'm probably showing my age that I admit that I'm actually on Facebook. But I can't figure out why in the world these markets would be around, at, or above all-time highs in the global pandemic. The country was closed for months. Businesses are closing. Do people just not see it? 1 + 1 = 2, right? And I'm sure many of you are having the same question, like, wait a minute, this doesn't add up. This must be market manipulation or some other nefarious evil thing, like Jay Powell is pushing the market higher. It doesn't make sense, right? This is not linear logic. It's supposed to be selling off right now, and it's not. We're up near all-time highs, and people can't understand what the hell's going on. And you're not alone if you have this question. There we go. The market, however, does not care about your impeccably constructed linear logical argument. You can put this together. You can put a QED at the end of it and say, I have provided all the due diligence, and I know exactly what's going to happen later on, and the market will just laugh at you and just keep moving. In fact, it will probably do exactly the opposite of what you expect. Why? For dozens of different reasons that, quite honestly, have taken me way too long to figure out through a lot of hard lessons, a lot of losses, a lot of embarrassment, right? You learn from these, you move past it, you get on. I don't want you guys to have to repeat the same. I'd love it if you could like instantly grok what I'm talking about here. But here's a couple that I'll give you to start with. First of all, the market is a massive discounting mechanism. The news that you're trading on today that you think, hey, look at the news is good, it must be going up. And it's available to literally everyone, has already been priced into the asset long ago. It's already old news. You're trading on the news that the market already has priced into the asset long ago. And here's another one. Price moves towards the fear. Now, you may not understand exactly what I'm talking about here. Perhaps somewhere down the road, you'll see something, you'll hear something, and you'll put two and two together and you go, oh, that's what Doc was talking about. Okay, so when you're ready, you'll understand what this movement or the statement means. But price moves towards the fear. Price moves because of emotions, either fear of missing out, fear of loss, forget about greed. Everybody says, no, it's ruled by two emotions, fear and greed. Forget about greed. Greed is nowhere near as powerful as fear. Fear of missing out drives markets much higher. Fear of loss drives the bears to cover, which pushes markets higher. If we flip around in the opposite direction, the bears don't get greedy with that. It's fear, right? Fear of missing out. This is where the bears always enter too late. After getting it wrong for years and years, they enter down at the bottom of the move. And of course, fear of loss is where everybody pukes out at the bottom. So forget about greed. Understand how fear rules the markets. So my point here is to forget about your linear assumptions. Markets behave irrationally. I've been trying to coach people through this for the last 15 years. Everybody comes to me like, hey, let me give you my background. I was involved in this LBO and I've ran this company and I've done this stuff. I'm like, congratulations. That doesn't mean anything about trading the market. It means absolutely nothing. So none of your background has any use when it comes to understanding the emotions and the weirdness that comes with understanding the market. So maybe you'll remember this somewhere down the road, but forget about trying to apply linear logic when it comes to understanding the market. The market behaves irrationally because it's traded by millions of human beings or bots that were programmed by human beings. And humans are irrational when it comes to managing risk. Who ever heard of somebody that was cool in the face of fire, right? Oh, he's cool. He's ice cold in the face of, like, nobody, right? Everybody freaks out when it's your money at risk, and you will invariably do the wrong thing. Don't worry about it. It's human. Everybody seems to be stamped out of the same mold. All right, got it? Number 2, let's talk about the psychology of runaway markets. And when I talk about runaway markets, I'm talking about, markets that are just doing this. And once again, we try to apply our linear logic towards runaway markets, and we fail. Market tops, I will say this, market tops are way, way harder to analyze than market bottoms. I can handle market bottoms, and I can get involved in market bottoms because bottoms are an event, tops are a process. Bottoms are an event, tops are a process, right? So when it comes to market tops, understanding where this thing is going to stop. I mean, this one here into end of 2019, early 2020, it went on and on and on, and it didn't seem to want to ever stop. The next thing you know, it's puking its guts out. That was your last chance to get off the roller coaster before everything fell to pieces. That was coincidentally the very week that we started Ready, Set, Trade. What a great timing it was on our behalf. Actually, it was good though, because we've actually done really well during this period. We've done really, really well. And that's because of the things that I'm talking to you guys about that have taken me years to figure out. Market tops, who knows where this thing is going to end up? I'm not sitting here trying to determine when this is going to die. I'm not shorting it into the highs or anything like that. A lot of you are. Psychologists have determined that the pain of missing out on a big rally is far more intense. So you see this market just going higher and higher and higher. I don't care what it is, what stock it is, or crypto, or futures contract, or Forex pair, anything. Doesn't matter. You'll sit on the sideline, you've missed it, and the pain of watching something run away without you is so intense that nothing compares to it. It's much more intense than actually just taking a loss. You take a loss, you're like, oh, well, stopped out. Shoot, I hate that, So you beat yourself up for a little while, you get over it. But sitting on the sideline watching something every day, it's going higher every single day, you will drive yourself crazy with this. And you have to be very careful not to chase after these things. And this is why traders, they cannot help themselves by jumping on at the top. So if you jumped on at the top, whether or not it was the top of the market back in early 2020, or if you want to go back to 2017 with the crypto market, doesn't matter. It's in your DNA. You can't help it. This is something you have to work on. An equally dangerous reaction, and to me this is even more dangerous, is those that they sit on the sideline and not only do they get anxious about missing the move, then they get vindictive about it, right? So for those of you shorting into the highs, raise your hands. Go ahead and admit it. These are people that want to punish the market. Well, I'll show them, I missed out on this whole move. So I hate Elon Musk and I'm going to show him. I'm going to pound this thing down into the dirt. And they short the markets and then they wonder why they get their asses kicked. Because again, this is just a different reaction. These people are a little bit more vindictive than the people that are chasing after the FOMO, and perhaps they think that they're being more of a, well, I'm a bear. I'm a more sophisticated trader. Well, you're more sophisticated in terms of how you're getting your ass kicked. And that's about it. So don't trade a market. Don't short a market that's going higher. Wait until it starts to drop, or wait until it sets up with a lower high and a lower low and starts to give signals that, maybe even divergent signals, things like that. So be smart about how you do this. Again, the linear logic is pulled out of the holster by these bears. This is unsustainable. It must go down. I mean, you could probably find any number of subreddits and Discord channels and everything out there from people that are getting their butts kicked because they're getting run over. And they're using all the linear logic in the world, and then they start to get betrayed, and then they start to get angry about it. And it's not making you any money, guys. It's not making you any money. Like Bruce Lee really said it best, be like water. Just go with the flow. Which way is the market going? Don't give any judgment to whether or not it belongs up there. That's not your job. Your job is just simply to go in line with where the price is going. Not to give judgment on whether the price belongs up there in the first place. Who cares? Nobody cares what you think about your linear logic versus the price value of that. Okay? You can yell into the wilderness and nobody will hear you. The market does not care. It will move towards the pain, and that might be you if you're trying to teach the price a lesson. I can't read that comment. Number 3, how is the overall market moving? What's it doing right now? What's the signature of this? I want to make 2 points here that will help you if you can apply them. Number 1 point here is that assets have been booking the majority of their gains in the aftermarket or pre-market, which is, for those of you in crypto, is probably a foreign concept that the market would ever shut. But yes, it does in the equities markets. It will follow the sun. It will open and close at various parts of the world, and it will follow the sun in doing so. So extended hours is basically any time that the cash market is shut. In the United States, the cash market is open from 9:30 in the morning until approximately 4 o'clock in the afternoon, Eastern time. 6.5 hours, and the rest of the time is considered extended hours. And so what you're seeing is the blue line here, or let's compare this versus the gray line. The gray line is regular hours. Market hasn't gone anywhere in the regular trading hours. So gains and losses have been offset. But all the gains have been coming in the after hours, extended hours, not during the cash market. So what does that tell you? This means if you're trying to time a breakout trade, you're going to lose most of your edge chasing the move. And this will give us another edge, as we'll see in a minute. The second point I want to make here is that big institutional players are chasing momentum plays. This is the thing that I noticed in 2017 and beyond is it seemed to be that everybody was, a Buffett player before that. A Buffett player means waiting on the pullback, waiting for people to be puking their guts out, and then they would stand in line and buy with both hands. And that's when markets were generally a bit more volatile, I guess you'd say, a bit more sideways. And since really the Fed has put the hammer down, been printing money like crazy, there's no shortage of money out there. There has never been a shortage of money since we started turning the spigots on in 2008. So that's 12 straight years of turning the spigots on. There's money everywhere. And now it's literally free to borrow for those institutions that can get their hands on it. This means accumulating assets in the exact opposite way that was taught by Buffett. Buying as the price goes higher. This is more of a Jesse Livermore type of thing. So retail is sitting there that was trained by Buffett and holds Buffett on, a picture of the wall. Oh, Warren, what would Warren do? Retail's waiting on this pullback and getting pissed off because it's overbought. And it keeps on moving. And that goes back to the first couple of points that I was making about this market, is that now people are getting angry. Now people are getting, so they're trying to punish the market. So this is all kind of wrapped up into the same thing. So overnight moves locking out retail. Everyone waiting on the pullback while it continues higher. This is how assets are moving today. So you can't trade the type of market that you want, only the one that you have. So for a lot of you, you're like, well, this used to work. All right, well, it doesn't work now. And this is your job, is you have to figure out what the market is giving you. So what are some of the ways that we can take advantage of this movement? The current character of the market. If that round peg is going to fit into that round hole, what can we do with that? Using options allows us to design trades that you simply can't do with stocks. So stocks, buy low, sell high, or sell high, buy low. That's pretty much it. Not much you can do with that. Dividends are crap these days. So with stocks, it's become a very difficult game, especially as expensive as things are. Now, one of the cool things that they're doing with companies like Robinhood is offering fractional shares. I just signed up for that the other day. I don't know when they're going to give that to me, but I've got a little Robinhood account to play around with. And I think that's cool. That's a good idea. But options are so much more flexible. For instance, if 80% of the movement in the markets, as we just showed, happens overnight, and then during the day, it just goes nowhere, that 20% happens during the day, and then the next day, off it goes again. What can we do to take advantage of this range-bound behavior that's happening like around here? Well, this is what options are great with, because we can trade something to make money when it's range-bound. May not have known that. So the price running in a smaller intraday range means that we can sell options against these ranges, like an insurance company, right? We can be just like an insurance company. It doesn't, yeah. So Kubsicle saying the after hours volume is low though. You're not trading the after hours volume. It can run and do whatever it wants to in the after hours, but you're going to do so without you. So look at this. The S&P 500 has got a couple of different tickers to it. The SPX is the big enchilada. The spiders are 1/10 the notional value. Here are today's options. Here's Friday's options. Here's Monday. Here's Wednesday. Here's next Friday. So every 3 days, you've got another option that's going to expire and turn into dust at that point. So you have at least 3 opportunities a week, because some weeks we'll get 4 and sometimes even 5, where options expire that day. This is what we call 0 days to expiration trades. 0 days to expiration trades. This is one example of what they will look like. This is what's called an iron butterfly. And the advantage here with the iron butterfly is that you have options that are right at the money, and these ones decay the fastest. Otherwise, you could set up something where you can get a lot more range. You can do something like this. This is what's called a high probability iron condor. I don't tend to like these though, because even though you seem to have a lot of range, the reward to risk is fairly poor and it's difficult to manage. Okay, so there's many different ways to do this, and we talk about this within our room. We also have what's called the expected move. Iron condor looks kind of like this. Gives a little bit more range. You can come up with any number of trades that fits your time, knowledge, capital, your availability to do the trade. The ones where we're playing a little closer, like hand-to-hand combat with a price right there, do require a little bit more time. But as you'll see, time can be exchanged for quicker profits. Right, so here's a couple of trades that we took today in the room. We're doing an experiment. We're experimenting, setting these things up like right at the open. And this one took a little over an hour to get $100. So we sell it for $15.35, buy it back for $14.35, capture $100. This one was $150. And this one actually took a little bit less time because it was technically entered and the entry was more accurate versus what we call the random walk entry of this. So 2 different brokers, E-Trade versus Thinkorswim. They're all kind of the same. Really, they all do the same job. So we seek to create trades with limited risk, and this is very important, is that you can find very, very dangerous ways to trade out there if you listen to the wrong people. So we're looking for making $100 a day. That's really what we're doing. Something consistent, modest. We're not out here going, hey, look at everybody, we just made $15,000 today. Look, for most people, that's unsustainable, right? Most people are not going to have the capital to do something like that. But most people have the capital and the skills and the knowledge to be able to make $100 a day. So that's what we look for. So don't continue to pound that square peg into a round hole just because it used to work. The market is always providing opportunity for those that know what to look for. It's always changing. It's always changing its stripes. It's a little bit of a chameleon. Depends, look at the market that we've had over the last year. We've had very different markets from month to month to month. And this is the challenge, is that something that you read in a book that was written 10 years ago is not going to necessarily work for what's out there today. You have to be adaptive and flexible to trade the market, whether or not you're trading crypto or the equity markets or whatever you have. They're always changing. So let's wrap up here. Let's talk about the crypto market for a second. What is the crypto market doing? Basically nothing right now. It's been range bound for months, refuses to move for the top 10, top 20. However, what it's turned into is a trader's market and not an investor's market. An investor's market is one where you just buy the dips and it all goes higher over time and everybody goes home happy. But it's not doing that. It's been in this hellacious 2.5 years of sideways correction, 2.5 years of bear market. So you can continue to dollar cost average if you want to, if you're a committed investor and if you have a super long time frame for holding. There's nothing wrong with that. But you can you can pick up the change that's on the floor today if you want to. That's what's happening. Swing trades are out there. If you know what to look for, the swing trades are consistently out there. And I would say just a couple of things will help you. First of all, buy things that are heading higher. Don't buy things that are heading lower. That means you're an investor. If you're a trader, you're going to buy things that are heading higher. And you're going to look for certain patterns, certain assets that are being accumulated. You're looking to get in, get your fair share, and get out. And this is an interesting one. This is one of the trades of the day that we pointed to a little over a week ago, was Digitex, and I just got my hands on their exchange. I just got my hands on a login to their platform, and I'm going to pretend that I'm Canadian for a few days and trial it out and let you guys know. Perhaps next week I'll talk to you guys about my experience with the Digitex exchange. Again, that's meant to be free trading, no commissions, zero commission futures trading on what is Bitcoin futures at the moment, but they intend to add a lot of different assets to the program. Okay, so that is our top 5. Let's get into the trade of the day. And for those of you that are already members on our Discord, you got this trade of the day today at 7:55 a.m. It was posted out there. This is what I talked about, was advanced micro devices being in this big base and coming up on earnings reports. And so at the time I wrote this, it was 57 a share, and now it is broken out and is almost at my target, which I said was $63, and got there one day. Time rests for no man or woman or whatever you are, right? It's not going to stay there, right? Another way to trade this is, if you want to use options, you can use vertical spreads. Let me bring this over here. I'm going to bring over just an interface of Thinkorswim just to show you guys what this looks like. So if you're, in this case, you're only risking about $43 to take a long trade per contract, $43. And what this represents, this odd looking graph here, this obviously, here's the zero line. This represents a loss. Since you guys are good, all of you engineers are good at the visuals here. That represents a loss, and this represents a win. And so you can cut your loss to $43 a contract with something like this, which is significant if you have a smaller account, versus trying to buy the stock, which is right now 60 some dollars a share, right? So this is, if we just go over to AMD on this broker interface, we can see that AMD is now up to about $62, is up. It's up 8% today for those that caught the trade of the day. So this is how you can do this, and you can trade earnings against this if you want to. If you want to go for, to me, earnings are more of a roulette wheel than anything else. I don't trade earnings typically because it's all a game of chance. And to me, trading requires skill to get the edge, and in this case with earnings, there's not so much edge there. Okay, so that's our trade of the day, but I still love AMD. This is more of a longer term base. This should run well above 63 by the time it gets going. So if you want tomorrow's trade of the day, I've got a deal for you. You can have it for free. All you got to do is go to readyset.trade/free and just poke your email address into there, and we'll set you up with a Discord login for free into our, there's no catch. Nobody's going to pound on you. Nobody's going to knock on your door or do anything like that. You're just going to be part of our free Discord area where we have a lot of stuff out there, a lot of assets. And oh, by the way, Mav is there too. You can say hi to Mav. He's in our Discord. He's the architect. He is the architect. Remember the Matrix, right? The architect. So just enter your email into there, and we'll take care of that. I promise not to pound you guys. We will not spam you or anything like that. You're just part of our free You know, and maybe someday you'll join the elite service and join the rest of us making money. So if you have any questions, that's all the material I had. We came in right at half an hour. Wanted to respect your time. If you enjoyed this, please show up next week. Let me know what else I can do for you guys. Or any other questions. Oh, Tracy, yeah, that's we wanted to okay that question. All right. I'll stick around here for see if there's any other comments or questions just for a minute here. Nice. All right. Good to see you guys. Well, I'll tell you what. If you have any questions, why don't you hit me up in the Discord area? How about that? It's free. Doesn't cost anything. All right. Okay, guys. See you later. Adios. We'll see you next week. See you in the room. Take care, everybody. Bye now.